There we go. Yes, so a
Oh,
few new names there, and welcome to Mauritanian Britain Business Council webinar. We do these increasingly regularly these days, unfortunately, rather than our face-to-face ones that we tend to prefer. But of course, it allows us to go to anyone all over the world. So welcome to this. Today's webinar is two guests today. As many of you all know, Ambassador Simon Boyden is going to give us an update, a briefing on what's happening in Mauritania from the point of the embassy, how things are shaping up. And then we're going to have a presentation from UK Export Finance, who are going to talk about the cover and the help that they can provide British and Mauritanian businesses looking to work together in terms of helping out with trade where other financial sources may not be available. We have set up a Facebook page as well, because I'm acutely aware that whenever we go to Mauritania, nobody seems to use LinkedIn. Everybody seems to be on Facebook. As you know, Facebook tends to be a bit more recreational in the UK. So we have now set up Mauritanian Britain Business Council Facebook page. So do have a look for that if you are so inclined. We can't meet in person at the moment. We were planning before this second wave broke out here to have a reception towards the end of November for Mauritanian Independence Day, but unfortunately the new government ruling here and rules of six and that type of thing has made that a complete non-starter. So we're trying to line up another webinar at least for before the end of the year, perhaps even two, depending on what we can do. So we will be doing that. However, in terms of physical events, we still have got the ambition to have our trade mission, which we have penciled in for the 8th of March. If things go as they appear to be going, where we have this second wave and then that subsides as the first one did, we think we've got a fair chance of getting this done now. So 8th of March is the plan, and that'll be a multi-sector trade mission to Mauritania, taking British businesses over there. So I think in terms of housekeeping and the like, that is enough for me. So I will hand you over to a man that needs no introduction to most of you, Ambassador Simon Boyden, who's been a great supporter and of what we've been doing and great help, and has always been very happy to talk to us and tell us what's going on in Mauritania, which has been tremendously useful to us all. So I will pass you over to Simon now, and I will go on mute. Okay, thank you.
thank you very much, Matthew. Welcome, everybody. I'd love to welcome you all virtually to Nouakchott, but in fact, I'm sitting in the Hertfordshire countryside at the moment, but I am returning to Nouakchott tomorrow. And as far as second waves of COVID are concerned, well, I'm not even sure there was a first wave in Mauritania. So very much hoping that you'll all be able to visit in March. And appreciate the delights of Nouakchott and the opportunities, business opportunities that you are interested in. So I don't want to speak for too long. I'm very happy to take questions, and I'm conscious, of course, that we have Carla from UKF to talk about the nuts and bolts of the export finance offer as well. But very briefly, I'll talk a little bit about recent political developments. Touch on the economy and economic development, and perhaps social and security issues briefly. I was going to share, or I will share, a few comments about kind of UK government internal cuisine, just given some of the changes that have occurred in the last few months, and our own ambitions looking ahead to 2021. And then perhaps just conclude with a few comments about specific areas of opportunity as they occur to us, and of course some of the potential obstacles which need to be overcome. So on the political front, I last participated in one of the MBBC events online, I think in late July, so just over 3 months ago, since when there has been a new government appointed. in fact, the number of new ministers is fairly limited. I think 6 new ministers and 3 shifted positions, if I recall correctly. I've been doing the rounds of new and old ministers since then, in August, late August and September, before I returned to the UK. And I will continue those calls later this week and beyond. But positive reviews, I think, is probably the way to summarise the general sentiment around the new ministers, in particular the new Minister for the Economy and Energy, Petroleum and Mines, both with long-standing experience in international organisations, technocrats, highly respected, and they have previously held ministerial or other government office as well, but both appear to not only command wide range respect, but also in my meetings clearly have a very good grasp of the challenges in their particular areas of responsibility. The other kind of running story, which perhaps generates more headlines than are justified, are of course the ongoing investigations or corruption investigations on the back of the parliamentary inquiry into the various, I think it was 10 or 11 in ultimately different contracts that have been awarded under the former president's tenure. The parliamentary inquiry concluded in late June. The dossiers were transferred to the Prosecutor General, and further investigations are taking place. I think there is some sense that is this just going to kind of run into the sand in administrative and judicial processes and never reach much of a conclusion. I'm not sure that is a fair criticism. It's not a surprising one, given Mauritania's history of failing to conclude such processes in the past. But I think on this occasion, there's a fine balance to be achieved between sort of maintenance of political stability and being seen to allow a judicial process to run its course. And that very much is, I believe, the president's intent. And these are complex issues. Public procurement, financial misdemeanors, crime, corruption, etc., are not straightforward to investigate and prove. And it seems to me they're approaching it in a professional way and seeking to avoid allowing this judicial process to become overly politicized. Some of you may be aware that the former Mauritanian ambassador in London, Kou, and former foreign minister, has become a kind of informal spokesperson for the former president, and was at an earlier stage quite outspoken and forthright in his criticisms of the charges or accusations being brought. I think that's died down a little bit, and I understand that in the last few days he actually has had a meeting with President Ghazouani. I'm not yet aware what the content or conclusion of that discussion was, but it seems to be entirely typical of the current president to have reached out and to have met a representative of the former president and to try and approach things in a less antagonistic, less hostile way than his predecessor would have done or was known to have done. I was never particularly concerned that Aziz was going to be able to destabilize things, pursue any ambitions he might have had to continue to play a serious political role. I still believe that to be the case. I don't think he has any real constituency or wide base of support. It's remarkable how quickly those who might have been regarded as close to him in the past may have put some distance between themselves and him over the last 12 months. There are, of course, a number of particular business people and family associates and others who are still perhaps a little bit in the spotlight, given the degree to which they may have benefited from or been part of some of the particular cases or subjects of investigation. But very broadly, I don't think it poses a particular political challenge, or a challenge to the political stability that is perhaps unusual in the region. On sort of the economic front, which is perhaps of more interest to many of you, earlier in the summer, after several months in gestation and only following the appointment of the new government, under the president's aegis, but not actually in his presence, a new economic recovery plan was launched. It obviously sought to address many of the challenges that have arisen from COVID. I'll come on to COVID in a moment, but the disease itself has not necessarily had such a direct impact as people might have expected, but the indirect economic impacts have obviously been significant. On the surface, it's hugely ambitious. It's, I think, valued at $650 million, 2/3 of which the government said would come from their own resources. That's still a significant ask of external resources of, $216 million. That being said, the World Bank and others were already committed to providing certain levels of support already, so it wasn't necessarily new money. The budget for next year has just been approved in the Council of Ministers, so we're looking forward to implementation of various elements of that plan. And one key element of it is a degree of sort of decentralisation and investment in productivity at the local and regional level. So moving some of the economic activity away from perhaps Nouakchott and Nouadhibou towards other main cities, Kaidi, Kiefer, Nema, Agjoust. There is a coordination cell, and they are inviting bids from Mauritanian and foreign companies for implementation of this plan, both in sort of execution of infrastructure and other projects, in providing equipment and supplies, services and consultancy, and capacity building more generally. Another element of the plan is around establishing a more effective emergency response. This has only really come up in the last few days, so I'm looking forward to digging into that in more detail on my return. But more broadly, the economic recovery plan identifies opportunities in agriculture and fisheries, in infrastructure, in stimulating private sector development, which I think has always to which there have always been a number of administrative and historic traditional barriers, which I'll come on to, and education and skills training, which I know is of interest to some of you. So it's a very positive step. It's taken over a year to get there from the election of President Ghazouani in July or June, July 2019. And of course, it's been slightly hijacked by the need to respond to some of the challenges that COVID has imposed. Just briefly on COVID, the official numbers, I think, are 163 deaths and 113 active cases. So, as I mentioned earlier, not exactly, certainly not a second wave and not exactly a first wave either. Now, we have to be realistic. They are only testing about 300 people a day, not 300,000. And there are therefore probably a number of cases that are going unidentified. But a very large number of those, even who have been tested and are positive, have been either asymptomatic or have had very light symptoms. The health system, such as it is, has not been overwhelmed, but neither have there been large numbers, at least anecdotally and through data that I've managed to access through, for instance, the International Red Cross. There have not been a significant number of excess deaths in the last 6 months over those in 2019. there has been a certain uptick, but nothing that would suggest widespread fatalities as a result of the pandemic. I'm going to speculate on the epidemiological or other reasons for that. It is a huge relief that there haven't been a significantly greater number of serious cases, because the health system would struggle to deal with that, and still would struggle to deal with it if it were to occur. But even after the internal restrictions on movement were lifted and the curfew was lifted, and indeed external travel as well under certain limitations, we have not seen a significant increase in cases. So inshallah that will continue. But obviously the broader indirect impacts, not only internally on economic activity, but in terms of investment and external partners and trade, has been significant. And in fact, even in the last week or so, there's been, perhaps not COVID related, in fact, food prices remained relatively stable for most of the last 6 months, but there has been an uptick in food and vegetable prices in the last week or so. But that seems to be largely related to Polisario attempts to frustrate border crossings in protest against the opening or the announced intention to open by a number of African countries consulates in Dakhla, in what they would regard as the Western Sahara. But that, other than that, there has not been a significant domestic impact on prices, but clearly economic activity in general has declined. I think that will probably suffice for me. I mean, I did say I just mentioned some of the obstacles. They're not new, and you will have experienced them either in Mauritania or in other countries. But I mean, notwithstanding the very positive impression that the new government has made, there are still huge capacity constraints in the administration. That will take a long time to address. I understand that, for instance, that the new energy minister spent his first week reviewing, well, he asked all staff to submit evidence, well, a CV, if you like, and evidence of their qualifications, and spent the first week reviewing them because he just felt that there were large numbers of staff who were unqualified, and others that were well qualified but not in jobs that reflected their qualifications. There's also, as many of you will be aware, a very short-term approach perhaps to business investment. The Mauritanians are very proud, and rightly so, for being commerçants, traders. There are grands commerçants and petits commerçants, but they do live off the small or the fragile margins of trade and commerce rather than necessarily looking at longer term investment opportunities. And that is very much needs to be part of their the implementation of the new economic recovery plan. They will also, of course, always seek to secure a degree of local content, and that's when we come on to education and skills training, because of course the capacity locally is relatively limited. So I mean, I think we're very confident that there are long-term opportunities, but it requires a patient and persistent approach to pursue them. But in terms of Mauritania's both its natural resources, degree of human capital, its critical position between the Maghreb and Sub-Saharan Africa, and indeed as a gateway to into the Sahel region, notwithstanding the challenges to stability there, the opportunities are enormous, and we very much look forward to helping you and your colleagues pursue them. So I'll stop there, but happy to take questions. Thank you, Matthew.
Okay, I'll go straight into the presentation then. I will just very quickly introduce myself. Hello, everyone. So my name is Carla Senatore. I work in the Business Origination Unit at UK Export Finance. And just for you to know, the Business Origination Unit is the department within the organization that looks at early stage business opportunities. So anyone who has a project idea or for a proposal that they would like to UKF, UK Export Finance, to consider for financial support, then they would come to my team for us to review the proposal and provide the first feedback. So UK Export Finance. UK Export Finance is the official export credit agency of the United Kingdom. An export credit agency is normally a government or a government-sponsored institution that is mandated with the task of supporting the country's exports. So this is very much our job. We are here to support the export transactions, to facilitate trade with the UK. We were the very first export credit agency created. We were established over 100 years ago now. We are part of the Department for International Trade. We work very closely with colleagues in Post, in DIT. Our mission is to make sure that no viable UK export fails because of lack of finance or insurance available from the private sector. This is really our mission statement, and it really sets the boundaries of our mandate, because essentially we are here to complement, not to compete with the private sector. We are mandated to support export transactions whenever the private sector is, for whatever reason, unable to help. We offer a broad range of financing and insurance schemes, which I'll touch on in details in a few minutes. And those schemes are really designed to help UK companies at all various stages of a potential transaction. We have schemes designed to help them win contracts overseas. We have schemes designed to help British businesses fulfill export orders. And we also have insurance schemes that are designed, as the name suggests, to make sure that the companies get paid at the end of a transaction. We operate following rules set by the OECD organization. So we are signatory of the OECD arrangement on export credits, and those rules will set out the different financial terms and conditions under which we can essentially offer our support. So I already mentioned what our official mission is, so I'm not going to spend too much time on this slide. Something important to remember is that we can support all sectors of the economy, so we don't really discriminate, we don't really have any preferences. We will very much happy to look at any potential export that needs support in any given sector. We are on cover for over 200 markets all around the world. We can support companies of any size. We often support SMEs, for example, and we can provide local currency financing in some regions around the world. This is just to give you a flavor of what we achieved last year. We provided support for over £4 billion, and we helped over 300 companies in the UK export to over 60 different markets. And the majority of the companies that benefited from our services, either directly by winning contracts or indirectly by being involved in large projects which we supported. So the majority of those companies were actually small and medium-sized enterprises. So a good 70% of the companies that benefited from our services last year were small companies. So let's have a look at the different schemes we provide. Broadly speaking, we can really divide our products into two different buckets, two different categories, depending on who is the end receiver of the financing scheme. So some of our schemes are designed to support the buyers of UK goods and services, so potential clients of UK companies interested in procuring from the UK. So we can help them, we can facilitate access to finance for them so that they can access the funds to realize their projects. And then, of course, we also have financing and insurance schemes specifically designed to facilitate access to finance and insurance to the UK companies, to allow them essentially access the working capital needed to take on export contracts. Looking at the first category of products first, what can we do for overseas buyers interested in procuring from the UK? Well, we will offer them a very competitive financing package, meaning low interest rates and long repayment tenors, for them to be able to procure, to tap into the UK supply chain for the realization of projects in, as I mentioned, in any given sector of the economy. In most cases, our support to overseas buyers or investors of, that are procuring from the UK will take the form of a guarantee. So we will guarantee a bank loan. So the loan will then go to the buyer of UK goods and services as long as the loan is used to procure a certain amount of products or services from the UK. Now, what the guarantee does, what UKEF guarantee does is the reason why we guarantee loans is that the guarantee has the power to mitigate the risk in the transaction, and essentially the bank that provides the loan will then be able to charge much more favorable interest rates. It's a little bit as if the bank is really lending to the UK government, and thanks to the high credit rating of the UK, then the buyer overseas will be able to enjoy good interest rates. And also, with our support, the buyer is also able to enjoy longer repayment tenors. We normally can offer tenors of up to 10 years, but in some cases, for some specific sectors of the economy, that the OECD particularly wants us to support, for example, renewable energy, water projects. In some cases, we are able to offer tenors of even beyond 10 years. So we can go up to 18 years in some cases. Our guarantee normally covers for up to 85% of an export contract value. Provided that we see 20% at least of UK content in a project. When the deal is below £5 million in value, you will hear us calling the scheme supplier credit rather than buyer credit. I won't go too much into the details and the technicalities of the difference between the two schemes. But the important point to remember is that we can guarantee loans of a different size. We can finance large projects, but we can also go well below £5 million in value. As I mentioned at the beginning of this presentation, we are also able to guarantee loans in many different currencies. We can cover up to over 60 different currencies around the world. So we can do CFA, for example, for West African countries. I mentioned that in the majority of cases, our support takes the form of a guarantee. So we act as guarantor of a bank's loan that goes to finance a project overseas. However, we do also have a direct lending facility, and as the name suggests, this is when we will act as a lender directly, so the money will come from the treasury, not from a bank. And but the principle is the same. We will lend to an overseas buyer of UK goods and services, provided that that loan is going to finance, at least to some extent, purchases from the UK. And normally, again, the 20% rule is the one that applies. We need to see 20% UK content at least in a project in order to consider financing that project for up to 85% of the project value. The main key difference between a scheme where we act as guarantor and a scheme where we act as a direct lender is represented by the interest rates. So when we use a direct lending facility, the interest rates will be fixed rates, and they are set by the OECD organization. And actually you can see what the rates are online at any time. So if you visit the page for the CIRS rates, which stands for Commercial Interest Reference Rates, you can see in real time what sort of interest rates we would be charging based on different currencies and different tenors for projects overseas. While when we act as a guarantor, of course, the banks are set by the bank that acts as the agent bank. And in that case, but the bank, as I mentioned, will be able to price the loan based on the fact that the UK government is backing the transaction. So even in that case, the rates should be fairly competitive. Direct lending, we tend to use direct lending on more selected cases, simply because for direct lending we only have available a fixed amount of money. And we used to have, originally we only had £3 billion available for direct lending. Those 3 billion were maxed out very, very quickly. So the Treasury gave us an extension to 5 billion. And later on, more recently, we received a further extra £2 billion, but this 2 billion can only be used to finance projects in the renewable energy space. So renewable energy projects would qualify right away for a direct lending facility in case of interest. We are able to support many different structures, financing structures. So we can lend to corporate entities, we can lend to sovereign entities. We can also look at more complex structures such as PPP, public-private partnership, or project finance type of structure. So we are really quite flexible when it comes to the structuring of the loan, of the facility. So what are the criteria, the eligibility criteria we look at in order to for a project to qualify for UKF support? Well, very first important element is, of course, the contract. We need to see an export contract. So we need to see a UK-based entity potentially entering into an export agreement with an overseas entity. So we need to see an overseas entity interested in purchasing goods and services from the UK. So we are all about export contracts. We need to, we will, of course, we will need to make sure that the project we are asked to support is a bankable one, is a viable one. So if, for example, if we are asked to support a loan to a corporate entity overseas, we will check we will ask to review their financial statements, just make sure that that entity has a balance sheet solid enough to raise the debt they're asking UKF to support. Or if it's a project finance type of structure, we will have to do a little bit fairly in-depth actually due diligence on to kind of measure the risk profile of the project. So really, this is to say that the project we're asked to finance needs to meet some basic risk standards. I already mentioned that we need to see UK content in projects. So we need to see 20% at least of content in terms of value, total value of exports of capital goods or services from UK-based entities to Mauritania, for example, in this case. And provided that we see 20% at least, then we can potentially support a project in Mauritania for up to 85% of its value. We will be quite strict when it comes to due diligence on anti-bribery and anti-corruption law. So we will need to make sure that the project is not in breach of any of anti-bribery and anti-corruption UK law. We will also make sure that the project complies with environmental, social, and human rights standards, especially when it comes to large infrastructure transaction, for example, where the project is quite likely to have a certain impact on the environment. So for when we facilitate access to overseas buyers of UK goods and services, the repayment period will be 2 years minimum, and then as I mentioned, we can go up to 10 years or even 18 years in some cases for some specific sectors. And last but not least, the bank we work with needs to be acceptable, so needs to be a credit-worthy enough bank with even better if they have a little bit of experience in working with export credit agencies. Looking at the second category of products I mentioned at the beginning of this presentation, I just wanted to touch on the schemes we provide in support of UK companies looking to raise finance to fulfill export orders. So we can help UK companies essentially access the extra cash that they might need to fulfill export orders, to fulfill working capital requirements, or to satisfy contract bonds request. So under our working capital scheme, we can guarantee a working capital loan for up to 80% of its value. And we can provide a guarantee to cover for up to 80% of the value of the bond. And in this case, so in those cases, essentially what we do is to enable the exporter bank to extend a working capital facility to the UK exporter to be able to make any upfront investment needed to successfully deliver on an export contract, or we will help the company not to be stopped by cash constraints when it comes to requests for providing cash collateral linked to bonds requests. So we can help UK companies on both sides. We also have insurance schemes for UK companies. The very classical export insurance policy we offer covers for up to 95% offer 95% cover for the value of the export contract in the event that the buyer overseas defaults on payments. And we do also help companies we do also offer a bond insurance scheme, and which is a scheme whereby UK exporter can be protected in the event that a bond is called upon for unfair reasons. And this scheme covers for the entire value of the bond, so up to 100% cover. Within the different insurance schemes we provide, a separate mention goes to overseas investment insurance. This is the only scheme we provide which is in support of equity investments, because in general you might have by now you might have understood that we are debt providers, debt facilitators, so we don't really do much on the equity front, and the only exception is really represented by the overseas investment insurance product. So this is an insurance cover. This is very much a political risk insurance cover for UK investors that are investing overseas, And it's a policy that covers against three specific types of political risks, meaning war or insurrection, nationalization or expropriation of the enterprise where the UK company has invested, and third, any restriction it covers against risks against any restrictions on repatriation of profits or limitations on the foreign exchange movements, essentially. And it's an insurance that can be renewed on an annual basis and up to 15 consecutive years. We have a great risk appetite for Mauritania. All the products that I described today are available for UK companies interested in exporting to Mauritania, and for Mauritanian businesses interested in procuring goods and services from the UK. We are on cover for all sectors of the economy, and we have plenty of risk capacity for the market. We actually recently increased our cover for Mauritania. We went from having 100 million pounds to over 1 billion. We now have up to 1.5 billion pounds available to invest in export business in Mauritania. So we're very keen to receive inquiries, project inquiries, and to possibly finance good bankable projects where Mauritanian businesses and UK companies are working on together. We can provide Islamic financing. So in the past, for example, we guaranteed sukuk bonds to finance the purchase of Airbus planes by Emirates airline. So this is just for you to know that this is a possibility. As I mentioned, we are quite flexible when it comes to the financing structure of the deal. So if there are any specific requirements or requests from the buyer, we will do our best to meet those requests. We also now have a dedicated person that covers the entire West Africa region. So we have a UKF representative who is based in Ghana. You might have some of you might have met him already, Steve Gray. I'm actually today covering for him because unfortunately he wasn't available. But yes, Steve Gray, you see his details here on the slide. He covers West Africa. So he's probably the key contact person for any project you might want to discuss, or in general, if you want to know more about UKF, is the first contact point. I work alongside Steve, but I'm based in London. And I cover Africa and China and US as well. So I added a few case studies just for you to get a sense of the type of projects we supported in Africa. We supported the Kumasi Airport expansion with a buyer credit facility worth 45 million euros. So just for you to remember, buyer credit is when we act as guarantor of a loan. And in this case, the UK content came in the form of engineering design, but also specific equipment such as baggage handling systems, conveyors, lightning, but also some software for passenger check-in systems and so on. So as you can see, when there is a project, a large project, as long as there is some UK content in that project, we're very happy to provide support for the project. This is another recent transaction we supported in Africa. We provided a direct lending facility in support of the construction of over 100 different clinics in Zambia. So in this case, the borrower, so the client was the Ministry of Finance. And again, the UK content came in the form of design and construction works, which were done by NMS Infrastructure Limited, but also in the form of lots of medical equipment, as well as specific training associated to the running of those clinics. And this is just an example of export insurance policy provided for a company based in Cheshire, Toll Group. It's a company that prints education now certificates, and at some point they won a fairly large contract in Kenya. And because they couldn't find any insurance in the private market, they came to UKF, and they obtained an export insurance policy. So to be able to go to this new market for them, because it was a new market for them, in all confidence that with all confidence that they will receive payment at the end of the transaction. Here you can see the team in London. So we have Richard Simon Lewis is the person that heads up the team, and then we have a few regional heads, and then I'm part of the team of Michelle D team. Michelle covers Africa, so Steve Gray and I are part of the Michelle D team. And we also have a network of UKF representatives overseas. So we have quite a few people now in Africa. I mentioned already Steve Gray covering West Africa. We recently also hired Isaac in Kenya, who is going to cover East Africa. And we have Dirk Vandenberg covering South Africa. And we're looking to hire a couple more people in to be in charge of regions in North Africa. And that's me, that's all for now. I'll be very happy to answer any questions you might have.
Great, thank you ever so much for that, Carla. That's really interesting. Some changes as well. I've seen this a few times in different events, and there's been some changes definitely around the renewable energy sector, which is interesting. Right, we're running up against the clock here, but there's a couple of questions that have come through. This is the point now, if anybody wants to ask Simon or Carla anything about what you've heard, or even ask us as MBBC anything, it's up to you. One question came in through the chat from William, and he's asked Simon in particular, you've mentioned the new government's new attitude to business and being pro-partnership and that type of thing. Have you seen any of this being lived out in reality, or is it words at the moment?
Good question. And perhaps as a result of having been absent for 3.5 weeks, I'm trying now to think of good examples. But I mean, there clearly are, because there has been fairly significant developments in in infrastructure, for instance, in Mauritania, even in the 18 months or so that I've been there. Clearly, some of that, if not a majority, might be from Chinese companies and state-backed operations. But there are, there are a number of French joint ventures, for instance, some of which will be well known, for instance, in infrastructure and port development. I don't know where the question came from, but was there a particular sector in that the participant had in mind?
I don't know whether William wants to unmute himself and ask that while we're on. No?
Hi, sorry. Thank you, Matthew. I suppose particularly extractives, construction and agriculture.
I mean, one specific example in the agricultural sector that I'm aware of is a UAE-backed project or company that are growing blueberries, which are exported and for sale in Waitrose, apparently. And they're looking to expand that operation to grow other fruit and vegetables. It's in the countryside, about 50 kilometers, no, 150 kilometers, I think, sorry, southeast of Nouakchott. I haven't visited yet, although it is a British Kenyan guy called Dennis Wedd who runs the operation there, and I'm very keen to visit him, because apparently it's quite a significant operation, and with a lot of fairly advanced technology for irrigation and harvesting. Now, I don't know what the specific financial arrangements were behind that operation, although obviously if it were UAE backed, I imagine a certain degree of generosity and easy credit. In extractives, I mean, in addition to Kinross, obviously, there are a number of smaller mining companies that have been granted licenses. I'm again, without being familiar with the exact nature of the contracts, it's difficult for me to comment, except to say that, as you will be aware, William, there will always be an obligation to some degree or another on local content, and it will have been a lot easier, or would be easier for many of them to operate with a local partner. But perhaps we could, if there are specific examples that you want to explore further, we can take that offline.
Yeah, that's good. Thank you. Another question: does the Mauritanian government have any specific policy objectives to be pursued during the current presidency of the G5 Sahel?
I wish they had. If I'm honest, I think COVID has rather distracted their own and others' attentions since they assumed the presidency. I think it was February the 25th. By March the 17th, they had closed the airports, the frontiers, and imposed all sorts of other restrictions. Now, obviously, that doesn't necessarily affect their engagement in the G5. And as perhaps the most stable and benign environment of the 5 countries, the 5 member countries, it had been hoped that Mauritania would take perhaps more of a leading role. I think, if I'm honest, their interest is perhaps more on the development side, but given the security challenges that and the kind of financial requirements, that perhaps hasn't taken off in quite the way that they may have hoped. I mean, there are a number of other institutions that have been established to address the security challenges in the G5 over the last 18 months. I think partly because there's been frustration that the G5 or the Joint Force has not been as active or effective as some had hoped. My own view is that those hopes were perhaps misplaced and unrealistic. I mean, we're talking about a limited number of battalions operating across a space the size of Western Europe. Mauritania itself is twice the size of France. The border with Mali is over 2,000 kilometers. So having small numbers of troops trained to work in a more integrated fashion is helpful, but it was never going to be the answer to the instability and jihadist threat that Mali in particular and other countries in the region face. The development side of the G5, I think, probably attracted far less interest from its Western supporters and sponsors, and far more interest from the 5 beneficiary countries. So there's been a bit of I think, a disjunct between their hopes and expectations and partners' commitments. But clearly the big ticket items from development point of view are around electrification, power generation and distribution, infrastructure, roads, rail rather less so perhaps, but certainly roads. Hence the interest in some of the port developments on the Mauritanian coast. And ultimately, security situation aside, making more of the geographical position of Mauritania as a kind of entry point into the Sahel region for trade and logistic distribution, etc.
Thank you. One more question here from Angel. Would like to ask if there's any information about opportunities in airports, air navigation sector, including dedicated airstrips for mining facilities. Is there any?
I'm afraid I don't have any such information, but if that is an area of interest to an MBBC member, then I'm very happy on my return tomorrow to ask my colleague, Mahmoud Abdullahi, our DIT country director, to explore that.
Yeah, great. And I think we have one more. Is that a hand up from Hadi there? Do you have a question?
Yes, actually, Matthew, yes. And good presentation, Ambassador. And my name is Hadi Fauzi. I cover Middle East and North Africa at Scottish Development International, which I believe you are aware of SDI. We have tried a number of years ago within two of the areas you mentioned in your presentation, and these are the aquaculture and education and skills training. With regard to the aquaculture, a number of years ago, a good report was prepared in English, and that was going to be done with a charitable organization in Mauritania. From Scotland would be the well-known organization Stirling Aquaculture in the University of Stirling. But at that time, we couldn't send somebody from Stirling Aquaculture to Mauritania because the FCO travel advice. And if your comment on that is useful. If you think there is a scope of going further on that, I'll be happy to send the report and some more information about that particular case. The second area you mentioned is the education skills and training. And as you know, of course, this is one of top and priority expertise in Scotland: education, training, skills, and in particular within oil and gas sector. However, really, there are a number of international oil companies now start working with Mauritania. Are you, Ambassador, discussing with them this area and whether that could be part of their corporate social responsibilities to support? In both cases, we are happy to help. We normally arrange and support trade mission to North Africa, but unfortunately, current stopped. Anyway, I'll stop at that stage.
Okay, Hadi, thank you very much indeed for your questions and your interest. First of all, I'd be delighted to receive the report you mentioned. As far as the FCDO, and this is perhaps of wider interest, as far as FCDO travel advice is concerned, I'm not aware that even several years ago, FCDO advice prevented or prohibited any visits. It is true that the advice as currently constituted does advises against all but essential travel to Nouakchott. But for you to pursue your projects, I would regard a visit as essential. So it's not a blanket restriction. There is, for a large part of the country, especially to the east, advice against all travel, which applies to me as well. However, since my arrival, I have been exploring if you like, seeking to acquire the evidence that would allow us to adapt our travel advice, which I think is overly restrictive. And an internal report has recently been completed, which I hope will, over the next few weeks or months, allow us to relax or to change our advice such that at least to Nouakchott and the coastal strip, and hopefully some degree inland, there will be no advice against travel. Advice against all but essential and all travel will still apply to areas of the country further east and further north. So that is in train. I'm hoping in the next few weeks, it may take slightly longer. It has to go through, it has to actually have ministerial approval when we make such a significant change to our travel advice. But I'm hoping that perhaps by the end of the year, we will have managed to secure that change. It will also make Matthew's and others' visits in March that much easier? Because I recall in September last year there were a number of concerns expressed by participants in the trade mission to Nouakchott. But I mean, I can assure you that I can't tell you what is essential for you to do your business, but clearly, if you wish to pursue a business opportunity, it's fairly essential that you're on the ground. And as far as the education and skills training is concerned, I mean, I have discussions frequently with BP and Shell as British or part British companies about their activities, and they're both heavily invested in CSR activities, including in English language and other skills training. I talked to Total and Exxon representatives as well. I perhaps haven't had the same type of discussion, but that's one that you would be able to pursue with them locally if you were to visit in March, or indeed through their offices and representatives in the UK. But it's also perhaps worth you talking to William of Investment Africa as well about their platform and capacity to put you together with local partners and clients. Thank you.
Thank you, Ambassador. Thank you.
Just on that, I mean, just to sort of clarify what Ambassador was saying there, we are planning a trade mission in the second week of March. So any Scottish, whether it be colleges, training providers, aquaculture, feel free to come along. We can make sure you have the details, and you'll all be welcome to come along on the trade mission with us.
Delighted actually to promote that, Matthew, really, but you don't think March might be a little bit early in view of what's happening just now?
I'm not sure, because I mean, this is a much wider debate, but I think if with Mauritania seems to be pretty all right now. It's opened up. It's easy enough to go in. We still, in theory, have to quarantine on return to the UK at this moment in time. I don't know. There is some exemption around business visits, but I don't know. I expect that to be better by the time we get to March, at least. And I think, without sort of being an epidemiologist or whatever, we are in the grip of what we might call the second wave now, and naturally that will, well, I would imagine will fade and end as the first one did, or will reduce. So I think by March there's still a very good chance that this could go ahead. And just on the point of essential travel only and that sort of thing, I personally can't wait to get back out to Nouakchott because I really like it there. I think it's a really nice city, interesting city. There's a lot to do, a lot to see. So I can't wait to get back out there, and the sooner we can go, the better. We had hoped to go for Mauritania energy mining conference early December, but although that is still officially on, I can't see any way that can go ahead.
I don't think, I mean, I've heard nothing about it locally, so I genuinely do not think it's going ahead. But I also, as you, see absolutely no reason from a Mauritanian perspective why you should hesitate, why anyone should hesitate to come. I mean, there are no restrictions. As I mentioned, I've just checked the data. Actually, there are still only have been 163 deaths officially, and there are currently 127 live cases. It is a completely different environment. Now, what I cannot promise you is whether you would be exempt from 14-day quarantine on return to the UK. But if most of you are working from home, well, that's not necessarily such a major constraint on your activities. But certainly from a Mauritanian perspective, I'm flying back to Nouakchott tomorrow with Air France. The only thing I require is a certificate to say that I've had a test and it's negative, a PCR test, and it's negative within 3 days of arrival.
That's right, yes. Yes, we work from home actually, Matthew, and we'll be happy to promote your the trade mission in March.
Yeah, well, we're still going. I mean, obviously, we haven't been vigorous in our promotion of the trade mission at the moment, because it might, again, it'll generally get the same reaction, I think, if we do that. But we're planning for it to happen. So
when you send the information, really, we will promote it. Yes, thank you.
Yeah. Okay. I'm conscious of time now. We've gone a little bit over, and black marks of chairmanship for me on these type of things. But unless there's anything pressing now, I think we can thank Simon and thank Carla for their contributions today. Very interesting, very informative as always. And we can draw this to a close. Any questions, of course, you can contact MBBC directly, but I think most of you have our details, otherwise you wouldn't be on this webinar. So if there's anything else you want answering, particularly airstrips, we can always look into that. If there's a question on that, then we'll be happy to do that for you. That's what we're here for. So unless anybody has anything burning that they want to discuss now, I will thank Simon, thank Carla, and draw this to a close. Yeah, thank you.
Very much.
Great stuff.
Thanks. Thank you very much, both of you.
Great.
That's all. Bye-bye.
Thank you, everybody. Yes, thank you.
Bye. Thanks. Thank you.